Have you ever wondered why some people seem to always make smart money moves, while others stay stuck living paycheck to paycheck? The truth is, it's not about luck. It's about understanding a few basic financial concepts that schools never taught us. In this video, I'll break down the foundations of money that everyone should know. No jargon, no boring lectures, just practical knowledge you can use right now. So grab a notebook, because by the end of this video, you'll be 10 steps ahead of most people when it comes to your financial future. Segment 1. Why financial literacy matters. Before we jump in, let's answer this. Why does financial literacy even matter? Well, money is involved in almost every part of our lives, whether it's paying bills, saving for retirement, buying a home, or even just enjoying a vacation. But here's the problem. Most people don't understand money. That's why so many end up in debt, living paycheck to paycheck, or never retiring comfortably. Financial literacy is not about being rich, it's about having control and freedom. Segment 2. The power of budgeting. The first financial concept you must understand is budgeting. Think of a budget as your money's roadmap. If you don't tell your money where to go, it will disappear. A simple 50-30-20 rule works for many. 50% for needs, rent, food, bills. 30% for wants, dining out, hobbies, travel. 20% for savings and debt repayment. Budgeting is not about restriction, it's about freedom. Knowing where your money goes allows you to prioritize what really matters. Segment 3. Debt and interest. The next concept is debt. More importantly, interest. There are two types of interest. Bad interest. Credit cards, payday loans, high interest debt. These trap you in a cycle. Good interest. Investments, savings accounts, compounding growth. Here's the rule. If you're paying double-digit interest on something, it's working against you. If you're earning interest, it's working for you. That's why understanding compound interest is so powerful. It can either be your worst enemy or your best friend. Segment 4. Compound interest. Einstein once called compound interest the eighth wonder of the world. Here's why. Imagine you invest $200 a month at an average 8% return. In 30 years, you wouldn't just have $72,000 saved, you'd have over $280,000 because of compounding. Compound interest means your money earns money, and then that money earns more money. The earlier you start, the more time your money has to grow. Segment 5. Assets versus liabilities. Another crucial concept. Assets versus liabilities. Assets put money into your pocket: stocks, rental property, businesses. Liabilities take money out of your pocket: loans, cars, unnecessary expenses. The wealthy focus on acquiring assets, while many people spend their lives accumulating liabilities that look like assets. For example, a car may look like an asset, but it actually costs you money. Everyday insurance, gas, depreciation. Start asking yourself with every purchase, is this an asset or a liability? Segment 6. Cash flow. Cash flow is simply the movement of money in and out of your life. If more money flows in income than flows out expenses, you're in a strong position. If it's the other way around, you're in trouble. Think of cash flow like your financial oxygen. You, Dan T., need $1 million in the bank to feel free. You need positive cash flow that supports your lifestyle. Segment 7. Inflation. Another concept people overlook. Inflation. Inflation means that the money in your pocket today will buy less in the future. For example, $100 in 2000 had the buying power of over $175 today. This is why simply saving money under the mattress is dangerous. It loses value. Instead, you need to invest in assets that grow faster than inflation. Segment 8. Building financial habits. Understanding concepts is great, but what really matters is applying them daily. Track your expenses, pay yourself first, save before you spend. Avoid lifestyle inflation, spending more as you earn more. Keep learning and improving your financial literacy. Wealth isn't built in one day. It's built with consistent habits over time. Closing, so let's recap. Budget your money, understand debt and interest, harness compound interest, focus on assets, not liabilities, maintain positive cash flow, protect against inflation, build strong money habits. If you master these basics, you'll already be ahead of 90% of people financially. If this video gave you value, hit the like button, subscribe for more content on money and success, and share this with a friend who needs to learn these concepts. Remember, money is not about how much you make, it's about how much you keep and how smartly you use it. Stay smart, stay financially free, and I'll see you in the next video.